Good evening, ladies and gentlemen. It is Sunday, the 6th of November, 2022, and welcome to Hindsight, where we learn to be a better trader. We're going to take a look at what's been happening on the speculative end of the market over the last week or so, and just talk about the general shift in liquidity on the speculative end of the market. Now, if you've been trading full-time, particularly the speculative end of the market, you've probably noticed that over the last 6 months or so, not much has been happening. Usually after June and July, which is the dead period because of end of financial year, we end up having a pocket of volume come in on the speculative end. Right, in August and, well, rather late August, early September is where things turn around for the speculative market, but we actually didn't see that this year. There was like maybe 6 days out of the whole month of September where speckies ran hot. I think it was right at the start of September, there was 3 days, and you'll notice every time there's a lull in liquidity will kick in for 3 days at a time. There's one good announcement that'll come out and money will pour in. And then for the following 2 days, the market's so excited they'll find any excuse to put money and move a stock for the following 2 days. Right? It's just how it is. It's a pattern that I've observed. It's happened for as long as I've been trading. And it's just what it is. But lately we've been seeing about 6 or 7 days continuously of significant price action on the speculative end of the market, which makes me wonder, have we bottomed out on the XJO? Now, the XJO's really started to sink since April, and in a bear market, some of the biggest bull rallies will occur. As you can see here, just big spikes to the upside, big spikes to the upside. There's a channel here that was broken and is being retested. Now, I don't really use the XJO as a benchmark for the speculative end of the market, but my point is that we've been on a bit of a down channel for quite some time. Pretty much since January, where it refused to make new highs, and it's just been making lower lows and lower highs. Now, if you notice me starting to slur my speech, it's not because I'm brain damaged, it's because I'm about 2 bottles of soju deep, and I plan on going for a third. But besides that, we're going to take a look at a few speckies, particularly ones that have ran, and discuss why they ran from a technical and a fundamental perspective. We'll start with WA1. Now, if we bring up the daily chart in WA1 here on the left-hand side, we can see that it IPO'd somewhere around 25 cents, didn't do much until it brought out an announcement, and it just popped to the upside real sharp. Now, WA1, if we bring up the actual announcement, it's the niobium here that's really moved the stock. 1800 parts per million of trios is actually really quite good, particularly at 54 meters, but it's the niobium which is quite interesting because we don't really see niobium above 200 parts per million, so 600 is quite significant, and really that's probably the benchmark for why the stock actually rallied the way it rallied. Now, the market caps obviously spiked pretty significantly. We go to the charts for WA1 and we open the intraday, and we're going to take a look at what happened on Friday. Now, even though the stock has been rallying non-stop, peaked at just under $3, even though during the pullback, there actually was a good trading opportunity on this last trading day. Now, this was my bread and butter, my absolute A+ setup of all time. You guys know it. If you've been watching at least like more than 3 videos that I've made, you've probably heard me repeatedly say, pump, consolidate, pump, baby. That is the setup. You all know it by now. What is it? It's basically a sharp rally to the upside into a consolidation. And the consolidation is at or near the highs. It's not the midpoint here. It's not the lows. It is specifically at the highs. Now, of course, this one ended up bouncing on VWAP a little bit, holding a VWAP, which was actually quite nice to see. Now, I don't have VWAP on my Iris Trader charting, so I didn't really notice this, but it's, you know, in hindsight, now that I open it up in TradingView, it's actually quite cool to see. But it ends up holding. There's a little volume pop. And this is where I tweeted out, this was my best setup. And I was just pointing it out. The ideal target's $2. Why? Because it's a pump, consolidate, pump. Now, someone asked me on Discord, like, why does this setup work? And I can only speculate what other people think and do, and I can only put some sort of assumption behind what happens. But ultimately, if I was to, like, put this into words, right? If I was to just summarize the entire market's thoughts and feelings, it would be something along the lines of the stock rallies, gets exhausted, but it consolidates because there's not enough sellers, right? There's clearly sellers here with volumes. Volumes taper off, and that's significant. We've got a volume off period here. There's no sellers willing to take it with high volumes below VWAP. So it consolidates. Ultimately, what you end up having is the initial spike. The initial spike followed through with a breakout above the horizontal here at 192. Now, a lot of people will close at 192 because it's the retest, but that is incorrect in my books and in my opinion, not financial advice. Fuck you, learn to trade on your own. But this is the trade that I always take that's A+ for me. The reason it's A+ is because it doesn't just get to here. It doesn't just retest the highs in this setup. This setup, ever since I've traded in the last 8 years, I've never once had this setup flop. It just doesn't. And when I say flop, I mean retest the highs and flop. It always breaks out. Does that mean it's going to break out next time? No, it doesn't. It doesn't guarantee shit. I'm just saying from a statistical perspective, there's a reason I call this A+. That's because it breaks through and it does it with such consistency. And you can just see on the volumes as well, it kicks in. There's not even a pullback. It's just straight up. Now, the interesting thing about this move is that it doesn't actually hold this level. Now, I got lucky because I bought in front of this horizontal here. I think it was more like 191 and closed out at 189 because it dipped and came back up, and I was lucky. I was lucky to get out for just 2 cents. It might have been 1.5, but anyway, I got lucky. Now, otherwise, what this setup normally does is it pulls back without that much strength and without that much selling, of course. Pulls back, retests, and at the very minimum goes for a retest of this high, and then usually just goes a little bit above and then fails for the rest of the day. That is like the stock standard pump, consolidate, pump setup of all time, and that is consolidate, volumes, break through, make new high, retest, break the previous high here, and then flop. You know, very rarely is there an extra continuation. It just practically never happens. And you might be thinking, wow, Damon, you're so good at hindsight trading. Well, look at every other fucking stock in history that's ever done pump, consolidate, pump, and you'll see this exact same pattern every time. Exact same pattern. 100%. Well, 90%. So the fact that this happened is an anomaly. The fact that it just sold right through, and for me in my head was like, right, get out straight away as quickly as possible and don't enter long again. Even though I've never come across this particular situation where it sells right through, the answer is obvious. The bids have disappeared, the sellers are too strong. This is probably going to act as resistance, and I'm actually surprised it kept going back up to 195. But anyway, this is like a first for this pattern for me. I've never seen it before, but I knew what to do because it was unusual. High volume selling, low volume buying. It's pretty straightforward, you know, textbook 101 stuff. So that's WA1 in a nutshell. We're going to take a look at CMO. Now, CMO was an unusual stock. Unusual in the sense that it had high volumes for a pretty much what I personally consider, an absolute trash announcement for copper. So here's the announcement: 18 meters at 0.5% of copper, 13 meters at less than 0.5%, and 17 meters at 0.26%. And it's pretty deep, 142 meters deep. A little bit of nickel that no one cares about, a little bit of cobalt that no one cares about. So we bring up the chart, and I wasn't looking at too many stocks on this day, so I was like, okay, I've got a spare couple of like areas on my monitor that I can look for another stock and just pay attention to it, and CMO was the only other one. Opened up at 20, pulled back, came back at 20.5. I think it might have been this candle that I bought or the candle beforehand, but it was 20.5 because the volumes are so good. I just couldn't ignore it. But I knew this was a short-term trade. So for me, it was just 20, 22, and that's it. 20.5, 22, all out. That's all she wrote. You know, make some peanuts. That's a nice, just under 10% trade for basically a few minutes worth of effort. Then I tweeted this out as well. taken CMO 20.5 long, didn't want to match it because it's fucking under 2%, because the market never cares about copper under 2%. And of course, closing very soon because, as I say, the market has turned, right? The market sentiment has turned and is accepting of garbage results. Now, to me, I look at this and I go, this is garbage. I would never have even looked at this stock if the market wasn't hot on the spec end, right? It's Friday. You know, the market's been pumping for about 7 continuous days straight. So I was willing to take the risk, take it at 20.5, close it at 22, but I'd never take this on match. On those results, I'd never take it on match. Yeah, it's like a 10, it opened up at about maybe 13 mil market cap. Don't care. It could have 3 kilometers of fucking 0.5% copper. I don't care. No one cares. The market doesn't care. And you can see what happens throughout the rest of the day. Low-grade copper. Dog shit. Comes right back down, fills the gap at 16. And look at that daily chart. Look at that. Look at that volume. The highest volume day it's had since 2010. And what is it? It's a gap up and sell-off. If that doesn't tell you the market doesn't give a shit about low-grade copper, nothing fucking will. Nothing will get into your head. You're a fucking garbage trader. What are you even doing on the ASX anymore if you're trading this shit? Sorry, trading and holding this shit. To be fair, I traded it. Now, that's just an understanding of what the market likes and doesn't like. So, the market sentiment has shifted in the speculative end of the market. So, I took a little bit of a punt on this one. The volumes were there to support it, as you can see. And just in and out. That's it. Because when one understands what the market wants in terms of copper on the speculative end, it's a pretty sensible, safe trade. It's very quick and easy. One doesn't just buy at 20.5 and looks at the volumes here and goes, oh, I'm just going to hold and hope it breaks the highs. Now, fuck that. I'm in. I'm out. Not touching this shit ever again until it hits 2% copper. Never touching this fucking stock again. Garbage. Dog shit. Please don't sue me, CMO. But it's fucking trash, alright? Now we got, what's the next one? We got WR1. This is a lovely trade. This one, I think this was, let me bring up the announcement. That's NFL. That's WA1. I got WR1. So here we go. Yeah, this is what I thought it was. This is the 160 meters of pegmatite collectively intercepted. Okay, great. Pegmatites in Canada. This is a company that's targeting lithium. So, when someone looks at this company, they go, right, they're looking for lithium. We've got rock chip assays of up to 4.89%, which is, you know, great, whatever. No one cares what rock chips are. But people assume that WR1 has 160 meters of lithium-bearing pegmatites. Nowhere in this announcement does it say lithium-bearing pegmatites. It just says peggies. Just peggies. No one knows what the peggies are. And if we zoom in, where's the zoom button on this thing? Now, I have a hard time eyeballing lithium in drill core results. I've looked at so many lithium drill core results, and they all look very fucking different. I don't even know what color to look for. My understanding is to look for like a light green color. I don't see any of it here. And I've looked at so many drill core results for lithium, and I can't eyeball it. Copper is really easy. Gold is really easy. But lithium drill core results, I just can't pick it for the life of me. You know, there's a little bit of pink here, a little bit of white, cream. There's like some chocolatey brown. There's some like super variable colors of green and gray. And it's just like I can't fucking eyeball it. Now, for me, WR1 is going to be super interesting because the assays should take about 6 to 7 weeks. So I'd love to see this drill core result and see if it comes up at like 0.2% lithium or some shit, so the stock can just tank. But irrespective of that, we've still got a very, very, very nice setup. First 3 days, pump, consolidate. We have a previous resistance here at 57 cents and it breaks through, consolidate. Very straightforward stuff. One doesn't have to believe that the pegmatites are actually any good, but once it breaks, it is what it is, right? Just follow the momentum and trade the momentum. Now, I'm not a fan of holding overnight. Over the last 6 months, if you can name me 3 stocks on the speculative end that have had news announcements that gap up on the second day and rally, I'll blow you. It just doesn't fucking exist, right? So gapping up from 52 to 57, that's a very nice gap up, or 56.5, whatever it was. For me personally, I always find stocks, if they do any kind of next day move or third day move, fourth day move, whatever it is, it usually does a little bit of a gap down. People freak out and sell, and then it rallies. But same sort of thing, it sort of dips and then rips. And of course, breaking this level here is just an absolute no-brainer whatsoever. Just a complete market buy here. It's broken 57.5, broken the opening price action, and done so on okay volumes. And it just breaks out to the upside. Easy, quick scalp there. And of course, what do we have? We have a pump. We have a consolidate. And what do we have? A huge volume breakout to the upside. Again, just another no-brainer trade if you're watching the stock. And where does it pull back to, guys? Come on. You all know where it pulls back to in a pump, consolidate, pump. The retest. This is brain dead stuff. Retest. Rip again. Doesn't come back for this retest. And this one just keeps going. This one was a little bit unusual in terms of pump consolidate, but it wasn't on news day, so it's a little bit less reliable to expect it to keep continuing. But the hype is there for the pegmatites, right? Because that's a really good news announcement, assuming there's actual fucking lithium there. Do we know if there's lithium? I have no idea. No one knows. It's just a drill core, and if you've got really good eyes, you can probably pick it. But it's just momentum, and that's all it is. And of course, there was a halt at 1 o'clock. And again, what did I say? Holding overnight. It's the same thing whether you're holding on over here at 1 o'clock, goes in a trading halt, opens the next day. This is very normal. Dip and rip. Dip and rip has been so common over the last few months, particularly this year, just generally speaking. It's just been so common that I would never intentionally hold something overnight. I know this was a trading halt here. There was no choice. People were stuck in it. But this is exactly what I was talking about. There's usually a rally the next day at 4 o'clock. From 4 o'clock to 10 a.m., dip and rip. So, we also have WA1. I think I already talked about that. We have AW1 is the other one that I wanted to talk about. AW1, now this one's really fascinating. So, we talked about CMO's garbage copper hits, right? Or at least what I perceive to be garbage copper hits. On this day, we had about a little over 4% copper hits. And I believe it was somewhere between 30 to 50 meters of it. And the market cap probably hit somewhere between 60 to 75 million, just off the top of my head. And then just dropped and collapsed. Way back down to 13.5, if you can believe it. I believe there was a cap raise at 12.5, which is why I got there. And this is keeping in mind that these guys have fucking roughly 40 meters at 4% copper, which is like a god tier hit. But they also have a good habit of gapping up, spiking and selling off. You look at the history of this stock, it does this shit time and time again. 1, 2, and now 3. Now let's have a look at the news announcement on the 1 minute chart. We have AW1, American West. We have 19 meters at 2% copper. So instead of 40 meters at 4, it's 20 meters at 2. So half as good, but it doesn't matter. It's new significant intersections, right? So we're getting more and more drill copper hits coming through. And these are actually not too bad. 10 meters at 2.3. The rest, not so good, but still, these aren't too deep at 58 meters. It's much better than anything CMO had. Hey, look at the market cap. It's 22 mil market cap now. And this is what confuses me about the ASX sometimes. In terms of peer comparisons, AW1 is so drastically undervalued that it sort of blows my mind, particularly when the copper inventories are sitting at there's 3 days worth of global supply of copper at the moment in terms of inventory. Look at Kitco, look at LME. There's no fucking copper in the world. It's just completely taken a nosedive. And then we have an interest in CMO here on the left-hand side. Sure, it came off, but there was still an interest there. You look at AW1 on the 1 minute chart, and it's like, what happened? What happened? It opened up, where was it, at 14 and a half. I mean, I got interested in that because I thought, not too bad. 15.5 came right back, retest, double bottom, and then just ended up on average taking a tick for this whole trade, and then it just ends up sinking. So this is a little bit confusing in terms of copper, but this is probably more of a stock issue than a copper issue. Obviously, I kept in mind that substantially better grades were here. There was a spike here for whatever reason on reasonably high volumes as well. And just for whatever reason, this company can't get off the ground. So you can see it's sort of chilling at its lows. If I was a punter, if I had a spare 5K and I had no other stocks to look at, yeah, I'd probably look at holding 12.5. Because it's sitting at like in the 20s, 20 mil market cap range for a company that has fucking sick amounts of copper. So I'm not quite sure, if anyone knows the history of this stock and company and why it just keeps hitting this range and just monstrously selling off. I'd love to know about it. I should probably dig in myself a little bit deeper and find out what's going on with the company. But we also have NFL. I'm going to take a look at NFL's announcement. We have native copper observed in discrete zones from 58 meters to 145 meters. Of course, disseminated blebby copper, 1 to 3%. And really, all you have is little specks of native copper. I've never heard the term native copper. It's usually just copper or chalcopyrite or pyrrhotite or any variation of that. But honestly, I've never heard the words native copper. So I'm not actually sure what that refers to. You can see little specks of copper here. Usually the drill cores that really get exciting for copper is just big, fat, gold copper looking color all throughout the core, just real big chunks of veins and stuff. So this actually looked very, very uninteresting to me. You can see pyrite veins, which is nice, I guess. But in terms of drill cores, I've seen substantially better drill cores in my time, and I actually wasn't that excited about this one. And NFL really, really was a thinly traded stock with like 6-cent gap and stuff like that. But nevertheless, it was still a fascinating trader. So you can see just based on the chart here, IPO'd very recently again, like the other stock we were talking about. 23 cents, we bring up the 1 minute chart and we can just see the intraday price action. And it's a little bit deceptive, honestly. This looks easy, but you really had to jump a spread to get this one. If I recall correctly, I believe this was the one that had a lot of spread on it. And it was just not very clean. You can see the price action, not very clean. This was a huge sell-off moment. This is one that I actually ended up getting on the day. So it was a rally and then a pullback. I didn't want VWAP. It felt like it overshot a bit too much. Going from 19 cents to 33 is a pretty significant move in a very short space of time. And the thing that spooked me about this one too was this here, just this sick volume candle. I was also talking about on Discord the heavy rug pull nature of this. There was a huge amount of churn on volumes, and it just wasn't looking pretty. So sorry, this volume candle here was associated with this one, but it sold off a pretty significant amount based on how much volumes there are here as well, right? So look how much it took to get from 30 to 33 in terms of volumes, and then look how much it took to shoot it down. One candle, all those gains wiped, all that progression wiped. So that was kind of spooky to see, and I didn't want to catch it at VWAP, but it was also spooky to see this candle here, just a sheer amount of selling. I thought, you know what, I'll let this go and I'll wait till this horizontal hits. So of course it does hit, it comes down, and then it fucking pukes it. So we got this, let me draw a proper horizontal here. It just comes right off, pukes through my order, and I had public Discord open. I was just seeing what people were saying, and people are saying they got stopped out. I'm like, why would you set a hard stop? For me, this was a buy opportunity. I was like, fucking awesome. Like I was spooked for about 2 seconds, and then I kind of woke up to myself and went, I gotta buy this. like, I've got to buy this. This is like a really sick opportunity. I scaled in as it was coming up, and then sort of started closing out at the 28-cent mark here. Because I wasn't really convinced by the volumes of buying, as you can see here. There was no real interest compared to the earlier session in the day, the earlier morning session. So it is what it is. I scaled out. Obviously, it ended up being sort of I don't know if I'd call it an incorrect decision, but I sort of sold effectively the high of this move, and it sort of consolidated really funny, and I just let it go. I kind of stopped watching it. Otherwise, I might have caught the breakout here and the retest of the highs. I wasn't expecting too much in terms of actually going higher because, well, again, that news announcement didn't really strike me as interesting. But instead, what I did do was catch the retest, which was, let's get rid of all these lines. It was this horizontal here. I screen capped it on Discord. I said, this is exactly what I'm targeting here. It's VWAP. It says horizontal. Got to get it a tick above. I can't remember if it was 2 ticks above or 1 tick above. I can't remember what the book was, but ended up taking it from that VWAP, just above that VWAP retest, and back to the highs. Just below the highs. It was a real quick trade, 30 to 33-ish. And yeah, it was just a quick 10%. I was actually really happy I caught that trade, particularly because it's like late in the afternoon. It was about 2:30. So yeah, really nice afternoon trade. I was very happy with that one. And of course, you can see it sort of breaks out, comes back to retest key level, but didn't really take it because it's 3 o'clock. I didn't trust the arrow power. I didn't trust the fundamentals as well. Again, when I understand what the drill announcement is, when I look at it and when I understand it, I can usually tell whether it's just going to keep popping to the upside, whether it's a significant announcement, or whether it's just something for specky traders to just gush over and then people who have a clue just sell into them. And that's kind of what NFL felt like to me. It was just like, here's an opportunity. There's been volumes all day, albeit the lunchtime period was a bit garbage. But volumes picked back up, so there's no reason for me not to take this VWAP test. You've got strong volumes all day, so of course VWAP should get respected on a day with high liquidity. That happens pretty much all day. So that VWAP works because of the liquidity. So yeah, really happy with that trade. Really happy overall over the last week, particularly WA1. That was the bread and butter trade. Absolutely, just the cleanest trade. So really happy with that. And guys, that's pretty much it from me. So I'll catch you in the next video. Cheers.